On the show today, Zimbabwe struggles to regain public confidence as it launches new currency. Mozambique files a case against Credit Suisse in London's High Court. Plus, Royal Dutch Shell plc faces prosecution over controversial OPL 245 oil field deal. Hello and welcome. This is Business Incorporated, coming to you live on Channels Television. I'm Edidiong Iwang. Let's begin with some of the markets we track here on the program. Over in Africa, the markets seem to be in high spirits as the new month kicks in. The JSE was in the green at intraday up 0.68%. The NSE was also uptick as at intraday, gaining 0.37%. Egypt closed the week in the green, adding 0.21%, and Kenya ended Thursday session in positive territory. Our major Gulf bourses ended the trading week on Thursday down with the Abu Dhabi index taking the hardest hit, dropping 1.5%. Dubai stock market fell 1.28%, pulled by property and financial stocks. Qatar's index softened by 0.24%, while Saudi Arabia's index gained 0.24%, lifted by banks and corporate results. European stocks traded higher on Friday, beginning the first trading day of March in a positive note. For more from the foreign scene, let's cross over to Conrad at Frankfurt Stock Exchange. Hello, Conrad. Thank you for joining us on the program.
Hello, Eddie. Thank God it's Friday.
Well, thank God it's Friday, and February is over with a 3% increase of the market in the United States and in Germany. It was another strong month for equities. Conrad, now tell us, where has all the pessimism gone and what can we expect this month?
Well, Eddie, of course, after such strong increase for equity prices, the traders here are now a little bit hesitant to predict that, the climbing of stock prices will continue at the same pace. If we combine the months of January and February here in Frankfurt, our share index DAX is even up 9%. And so no wonder that traders are a bit hesitant. Where has all the pessimism gone? Well, I have to say it has not really gone. All the topics that we've been talking about for weeks and months are really still there. You know, the trade dispute between the Americans and the Chinese, Brexit is looming. What's changed, though, is the position of the central banks, the monetary policy makers, and their outlook on the economy and on interest rates. The Federal Reserve this week, its chief Jerome Powell in Washington said that soon the Fed would announce that it's stopping the reduction of its large balance sheet, and that means basically that it is slowing down the phasing out of its quantitative easing, of its very generous monetary policy. Also, no one is expecting, or fewer and fewer people in the United States are expecting interest rates to rise there this year. Here in Europe, the European Central Bank also is not expected to raise interest rates this year because, well, consumer price inflation is so low. Today it was reported that in the Eurozone in February, consumer prices increased at a rate of 1.5%. That's much lower than the target of the ECB.
So Tesla has announced a loss for the current quarter, more job cuts and closings of Tesla stores. But Elon Musk also announced that selling a cheaper Model 3 at a price of $35,000 is about to start. Is this a game changer for Tesla?
Yes, it is, because this $35,000 model is the entry for Tesla into the mass market. The problem for a few investors out there is that they do not believe that, this entry into the mass market will be easy for Tesla, that there's a bumpy road ahead for the car maker. Those announcements today of new job cuts, the closing of stores, this online-only sales strategy that Elon Musk talked about, all this indicates that the car maker really has a problem with money, that it doesn't have as much money as it needs to really really produce cars and deliver them at a really, really high quality. This is an expensive business, and there are investors out there who believe that Tesla is going to face that fact very soon. The shares in Tesla today are trading lower, around about 3%.
Okay, in other mobility news, German rental company Sixt has announced major changes that drove up the share price significantly. What exactly is going on?
Well, that's a very interesting mobility story today. Sixt announced a new app that it's launching today, which allows the 20 million customers that this company has worldwide to use all the services that Sixt has to offer and more in only one app. And I'm talking about car rental, car sharing, ride-hailing and taxi services. All of those combined you can use with this one app. The taxi services, of course, and the ride-hailing, that means that Sixt is cooperating with other services providers. But the car-sharing services and the rental services, they're combined here, which means that also in the future you just simply use your mobile phone if you want a Sixt car, and you don't have to get to a station to pick it up. You can pick it up in many different places in one city. That is very innovative. It's the first company to come out with such a service. And you know, the mobility services sector is expected to grow quite significantly. PwC, PricewaterhouseCoopers, the advisor company, predicts that this market in the year 2030 will be 400 billion euros strong, only here in Europe. No wonder that investors are really enthusiastic about the news today. Sixt shares are up around about 9% today.
A good place to leave it. Thank you for your time and enjoy your weekend.